Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Megan Grebner. With us is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we head into the holiday weekend, I had hoped we could spread some good cheer, but I'm pretty sure we're going to open up our bag of tricks like the mean old Mr. Grinch this week.
Yeah, I'm afraid it's a bag of coal under the Christmas tree on a few of these reports this week, Megan.
Well, we will get into those. Let's start first and recap what happened on the markets this week.
Yeah, if we start on the hog side of the picture, I'd say cash hogs are down just a little more than $1 for the week. Current lean hog futures basically flat for the week. If we look at the pork cutout value, so now $2.4 lower for the week, led again by, as we've been saying for a while, weaker hams and weaker bellies. I like to remind us now that that pork cutout value sits about 4% below where it did a year ago at this time, where just a few weeks ago we were talking about higher pork cutout values. We're now, relative to a year ago, we're not talking about those being below year ago levels. On the cattle side, cash fed cattle, call them 250 higher for the week. Feeder cattle steady to $1 lower. It's really on the future side of this equation that we saw a lot of weakness this week. We'll call that current feeder cattle futures contract down nearly $6 for the week, while fed cattle contract off 250, and we'll see how we end here given the reports that we have out, but that's a lot of weakness that we've already seen in those markets this week. The choice beef cutout value down $2.70 for the week, led in large part by what were lower rib prices this week. Even on that choice beef cutout value, it's only 1.7% above year ago levels. So for both beef and pork, we're starting to see those wholesale values back where we were a year ago at this time.
Which is really interesting because all year long we've been talking about how much they've been running ahead of where they were year ago levels, and it has not taken either one of them very long to drop down to where we were a year ago.
Let's start hoping for demand that picks those back up as we get into early 2018, but it has been a slide lower on both sides of that equation, that's for sure.
We have a whole slew of reports to talk about. The USDA has been busy in this, I'm going to call it last business week of the year. There's some stuff that happens next week, but it'll be pretty quiet in between holidays. Let's start first and take a look at livestock slaughter. That came out this week. I don't think that story is changing. We know that there's a lot of production.
Yeah, absolutely. I mean, we shouldn't be surprised that we're going to sit here and say, yeah, we had a record red meat production for November. We've been saying that for a large part of what's unfolded this year. But just to remind us, so through the first 11 months of 2017, we've seen red meat production total 47.6 billion pounds. That's just 3% above 2016's level, which, as we know, was a record. So we keep putting more red meat out there on the marketplace, and both beef and pork were higher. Beef up 4% relative to a year ago for the first 11 months, and pork up roughly 3% relative to the first 11 months. So we continue to just talk about large runs of meat. I might remind us when we look at the weights just for a second, where we have the hog live weight up 3 pounds relative to the previous year. That's starting to add a little bit of more pork to the mix. We've kept cattle weights down. They're down 11 pounds relative to the previous year, but combinations of weights and slaughter continue to be important for us as we move into 2018.
How nervous does the beef sector get with the fact that they've not seen the expansion that the hog industry has seen specifically? And if we continue to see these big runs, and we're going to see some more cattle coming to market towards the middle of next year, and we'll talk about that a little bit later, but we don't have the capacity's not growing.
Yeah, so we'll get a lot closer, I guess, on the capacity side of cattle, perhaps as we get into 2018. It certainly suggests that it's putting beef processors in a better position as larger runs of cattle probably give them a chance to increase those margins relative to what they've run for a while. This is back to the old story of a few years ago. Those margins were very nice for producers, if you will, because they were very tight for processors. What comes around goes around, I guess, is the saying here. As plants in some cases closed, now doesn't give us the same capacity that we once had, and we might get to deal with that as we look ahead in 2018. I'm not going to suggest we're out of shackle space there by any stretch, but certainly allows beef processors to have a little better year perhaps in 2018.
Cold storage came out this week as well, and some good and bad news out of that report.
Yeah, absolutely. So I'd like to remind us, we've seems like we've been on this story all year long, and I'm afraid it continues into 2018 of how does supply and demand, when we have growing supplies, what happens on the demand side. I guess when you look at pork and beef in particular, so our December one stock reports, number one I'll say is a little positive on that side. Combination of beef and pork ending stock still below year ago levels tells me that demand, both domestic and internationally, have been strong enough to make sure we don't back up beef and pork in freezers at this point. That's the very good news of cold storage report that we got this week. Unfortunately, when you look at the combination of chicken and turkey, which is primarily chicken, those stocks are now 15% above where they were a year ago at this time. So they've been growing rapidly here the last few months, and it just reminds you that we do have the beginning of, at least in chicken breasts in particular, some growing stocks that we have to deal with.
On the end side of that, does that put a little bit more competition or some interprotein competition between your beef and pork and chicken, because you've got to clear it and you've got an excess of it?
Yeah, so maybe a little bit. I guess to go along, at some point, restaurants may decide, hey, there's a little bit of interest in featuring some chicken products that maybe they haven't for a while, especially those that might think consumers are interested in that product in their store. I sometimes remind folks, though, our old ideas that all these meats are substitutes with each other might a little bit go out the window when you think about bacon for a minute. So perhaps bacon wrapped chicken breasts are something that would be more appealing to get a little flavor from the pork side into that chicken. So sometimes complements, sometimes substitutes. It's a little different story than maybe we would traditionally think about, but big stocks hanging over the market certainly, I think, puts pressure across the board on prices as we move ahead.
More chicken wings?
If the chicken industry could figure out how to get more chicken wings and less breast meat right now, they'd be in a much better situation. And what a different story that is relative to several years ago when we wished we could get more breast meat.
Talk a little bit. We're going to get into the big two today, and it really was not a great day for reports. Let's start first with the hogs and pigs report. As we take a look at that, sow inventory also up on the year, and that's going to be the theme that we're going to talk about all day today. Yeah,
absolutely, and we shouldn't be surprised. I guess of the two reports, I'll say hogs and pigs, in many cases at least, didn't get too far outside of our range of pre-report estimates. When you look at sow inventory at 6.179 million head as of December 1st of this year, that's 69,000 more than a year ago. You've got states like Texas, South Dakota, North Carolina, Nebraska, Missouri, Michigan, Oklahoma, Pennsylvania, all growing sow inventory. That came in 1.1% above a year ago levels, just slightly above the pre-report estimate. When you look at market inventory, they're also higher, up 2.5%. That also fell within the range of pre-report estimates, but towards the upper end. So when you start looking at some of these other categories where we start falling outside, so that September through November pig crop, USDA said came in at 3.2% higher. That's 0.2% outside the upper end of the pre-report estimate. So more pigs that we get to deal with than we thought pre-report. For me, the farrowing side certainly sticks out, and farrowing intentions in particular. These through February, farrowing intentions up 2.8%. The upper end of the pre-report estimate was 1.8% higher, so a full percentage point outside. March through May, up 2.3%. That fell 0.2% outside the upper end of the range. So producers certainly suggesting farrowing more sows than we would have anticipated pre-report, which again continues to push more hogs for us as we get into later part of 2018, maybe more than we would have thought. So I think we're going to continue to see all of us upping pork production for 2018 as we look at a report like this today.
As you talked a little bit about hog weights earlier, and we see all this. We've had this added slaughter capacity this year. We have a couple more. Is there 2 more coming online in 2018?
Correct.
So as we look at this continued growth, are we going to maybe see a reduction in weights to at least maybe pull back some of the amount of pork as those plants come online and maybe help with that whole, we've got more pork coming, but maybe not at heavier weights and bringing more meat to market?
Yeah, I guess in many ways I go, let's hope that's the case as we go through 2018. I think you've certainly made the case as to why weights could continue could move lower in 2018. Feed costs, I think, are going to continue to remain fairly cheap as well, which might actually move us in the other direction. The 3-pound increase that we saw out of the livestock slaughter report, if that continues, then all of a sudden not only do we have more hogs coming to town, but adding more weight to them. Those things are additive whenever you look at the overall percentage growth in pork production suggested for 2018. And another 1 billion pounds of pork out on the marketplace in 2018 just means we need strong domestic and international demand. And although we've been able to play that record for all of 2017, it gets even harder with the kinds of growth that could be coming for us here in 2018.
I would also assume it gets a little bit more difficult too when you look at the trade conversations that have been going on and the concerns surrounding NAFTA. You talk about a drop in hams, and Mexico really loves U.S. ham products, and that can continue to drop if we don't get this figured out.
Yeah, that's absolutely correct. You know, Megan, I all the time I talk about being a good two-handed economist in terms of the pluses and minuses from a price standpoint, but I'm afraid my minus hand has a lot more things that bother me about these markets than my plus hand has right now. And trade's certainly one of them. You just take NAFTA and go. So even if we get a successful NAFTA agreement, I don't think that necessarily helps us that much directly in pork. But if we don't get one, it hurts a lot. And so all of these things make me, again, worried about that downside risk. That's saying that in the face of what has been markets that have proved to be better than we would have thought in 2017. And producers remind me all the time of those of us that were predicting lower prices in 2017 got it wrong. And many of them will suggest that can continue in 2018. And yes, with more pork processing online as well, all else equal, they're going to bid a little harder for those hogs. That might be helpful to producer prices at least.
All right. I had hoped we would get to go to Christmas break with everything tied up in a pretty little bow, but you alluded to earlier that you were delivering lumps of coal today as well. The cattle on feed report really was not what was expected.
Yeah, absolutely. So we'll just start with the better of the two pieces of news that we want to talk about. So on feed, December 1 came in at 8.1% above year ago. That's 0.8% above the upper end of the pre-report estimate. So more on feed than we thought. December 1 placements placed in November up 13.9%. That's over 4% above the upper end of the pre-report guess. You know, that average pre-report guess on placements in November was setting at 5.1%. So we more than doubled the average pre-report estimate. So maybe part of the good news out of that report. So I can try to find something here for us today. A lot of lightweight cattle moved into feed yards out of this report. So perhaps some of the drier weather we're seeing in some parts of the country have accelerated some moves of calves into the feed yard. The less than 600-pound category up 140,000 head. Might tell you when we're up in total 256,000 head. A lot of those were lightweight calves. Texas was more than half of that placement number. Again, I think some of that weather issues could certainly be at play there. So maybe that's accelerating some of those calves earlier than otherwise would have been the case. But certainly a lot of cattle placed out of the report here.
Here's my question. Are we looking at all of the feed yards, or are we only looking at what's going on in the rest of cattle country?
Yeah, so I think this is an important question and hard to get a handle on at this point. But USDA is only surveying those 1,000+ head feed yards as they look at cattle on feed numbers. Most of the time, that's fine. However, I remind myself all the time that if you go into corn country right now, and you've got a bunch of corn producers who are seeing $3 corn, or maybe in some cases even below $3 cash corn today, saying to themselves, well, maybe I should feed some cattle to help my corn price side. I have a hunch there's a lot of smaller feed yards that might be feeding cattle for the first time in maybe a long time. And that might only increase the actual slaughter numbers that we get as we move into 2018. My windshield and the anecdotal discussions that I've seen certainly suggest that's the case. If I talk to a group of cattle producers and I make that case, I get all of them shaking their head really quickly about, yeah, I see a lot of that as well. So again, we might not even be getting a true accurate reflection of how much growth we might get next year if we are feeding a lot of cattle in very small feed yards.
Really, I think the takeaway from both of them is there is more protein coming.
There is, and so I think when we get done with 2018, Megan, we're going to be back to per capita meat consumption in this country that is above perhaps where we were in 2007. If you look at that data, we moved down 20 pounds per capita as we had record feed prices, economic downturn, and we've recovered all that. We've recovered really quickly. It is amazing how quick these industries are to expand to positive profit signals and how slow they are to respond to negative profit signals, or at least break-even profit signals. It kind of suggests to me that we're in this long dragging period of not very good returns and everybody's going to hang on. And that period's one where you got to watch costs really carefully. It's going to be those that can produce the most cheaply that are going to be in business longer term.
And next week, with the fact that it's going to be a pretty slow market week, we'll take a quick look ahead at 2018, and I think we'll talk a little bit about being able to manage our margins and prepare for another year of bigger production.
Yeah, I think that'll be the story that has to unfold. And again, so start or end here on a positive note of certainly 2017 exceeded our expectations from a price standpoint. If demand stays as strong as it was in 2017, perhaps we'll even talk about a 2018 that is better than we think. But certainly the supply side of the situation is, for very large supplies, being a drag on market prices.
Scott, have a very Merry Christmas. We'll talk to you next Friday.
Same to you, Megan.
Thank you. To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a very Merry Christmas. We'll talk to you next Friday. I'm Megan Grebner on Brownfield.